Welcome, everyone. How is it going? Happy Saturday, April the 2nd. Live on a Saturday. And you know why. Thanks for tuning in, everyone. I see everyone in the chat here. Let me know where you guys are tuning in from, city, state, country. Let's talk Tesla deliveries. Deliveries are fresh out of the oven. And it's not really early here. It's about 9:30 in the morning. But Tesla was kind of late reporting these this morning. But nonetheless, I won't bury the lead. Deliveries for this quarter are 310,048 cars, setting a new record for deliveries. Because remember, last quarter, Tesla delivered 308,600. Now, on the surface, I have to say, I was definitely more ambitious than probably expected. But remember, the street was at 309,000 cars being delivered for the quarter. Tesla barely, minorly beat that. If you want to call it meat, that's fair enough. But I think this goes to show how hard this quarter was. Supply chain issues, key suppliers going down, Shanghai shutdowns, which, by the way, Shanghai is still down. I want to talk about that in the stream here as to when it might come online. And so, in the face of everything, Tesla still managed to somehow grow their delivery count. It would have been really easy for them to miss this street number. But again, beating quarter four in quarter one and beating the street, albeit barely, fundamentally good long term for Tesla. It goes to show the resiliency that Tesla has. Remember, long term, I don't care. This is showing world-class leadership in really challenging times. Now, short term, right? If you're wondering about trades or wondering about how this might be priced in, this is my 2 cents. For all intents and purposes, we met the street at 309,000. The whisper number is usually a little bit higher than that. So coming down to it, I would say missing the whisper. I'm not actually sure if anyone knows in the comments in the chat. I'm keeping an eye out what the whisper number was. It's probably got to be 5 or 10,000 higher than that. Missing that, I would say there's probably some consolidation here. I wouldn't expect Tesla to rocket like it did on the first trading day of January when it posted quarter four deliveries. Because remember, and I have the spreadsheet here, quarter four was 308,600 deliveries for Tesla. This quarter, 310,000, so but 2,000 higher. The growth rate, by the way, for Tesla this quarter, year over year, quarter one over quarter one, is 67.77%. Massive, right? And if you want to, let's extrapolate that over to last quarter. Whoops, that's not it. Let's extrapolate that over to last quarter. Last quarter growth year over year, quarter four was 71, rounding up percent, 71%. So Tesla maintaining that 67 to 70% year over year quarterly growth, that's massive. I don't want to necessarily project that out, but if we did, and we said that Tesla could do way better next quarter, and this is just on the fly here, and let's say Tesla over quarter two did, let's say 70% better because there's no more shutdowns, everything like that. That would get us to approximately, let me just make this a little bit easier to read there. That would get us next quarter to 342,000 deliveries. Now, of course, this is dependent on Shanghai coming online and supplies getting better, but I think they will. I mean, I think I think quarter one is probably going to be the worst quarter. And that's fair enough to say anyways for autos. But quarter one, given Omicron shutdowns and China holding off on their zero COVID strategy after the Olympics, has been delaying this a little bit. So let me know in the chat what you guys think for Monday. I want to get a little pulse here about just say red or green. I'm going to say if we retest, and I've pulled up my Weeble here, if we could retest, and by the way, it's so crazy that we're talking about 69 or 67 or 70% year over year quarterly growth, or year over year growth, and we're talking about how the stock may consolidate, right? But I think the 9 EMA is a fair place to consider demand kicking back in. Margins is going to be another question for this quarter to see how that goes. But I'd expect margins to probably take a bigger hit next quarter once everything's online. Chicago, Toronto, Atlanta, Nanaimo, Atlanta here again, Norway. Awesome. St. Louis. Thanks for joining, folks, on short notice. No, I'm not sleeping. I am here. Let's see here. Just curious. Lawrence says, do you think there'll be a correction Monday? I'm thinking there'll probably be some chop up and down. It might be one of those days where Tesla, and again, this is just my 2 cents. I think it might be one of those days where Tesla is yo-yoing red to green, green to red, whatever it might be. But I think as long as we consolidate in around here, I still think 1100 might be tough in the next day. Let's say just on Monday, but the week might bring, if Shanghai news comes out positively, I think that's going to be a big. I think that's going to be a big boon. Hope I'm wrong. Hope we just gap up. I guess it does depend on macro as well. Okay, and so let's talk about where's my screen here? Let's talk about Shanghai a little bit. So someone tweeted at Dan Ives saying your thoughts on the COVID lockdown in China. Concern it might go on longer. And Dan Ives replied to that saying a few days is fine. Longer than that is an issue. So. And I always like to hear what Dan Ives is saying just to get what the street is thinking in terms of buying and selling or, let's say pros and cons of anything happening. So longer than a few days. That was tweeted on the last day of the month, March, that is. So that was tweeted on Thursday. And so here we are sitting on Saturday. I'm not sure what the exact update on Shanghai is, but I think it's probably still down for the next couple business days. But yes, I think it's important to realize that Shanghai is eventually this is the big at scale factory, of course, but we still have Berlin, which is actually looking remarkably well. And then also we have Austin coming online soon enough. And Gary Black just tweeted as well. I want to share his tweet. Tesla quarter one deliveries were a record 310 versus the 309 consensus, up 68% quarter over quarter. Quarter one production was 305,000. This was despite Shanghai being closed for 6 days in March for COVID. Good to know how many exact days. So it was 6 days. So he's estimating that to be about 14,000 in product units. At the end of quarter one, Tesla inventory is at 13.5 thousand, about 3 days worth of inventory. No update on Shanghai reopening. Okay, there we go. So we got an update there, which is no update. The best update is no update. Okay. And someone's asking about Berlin production. I don't know what Berlin production, they're not going to itemize it out. Maybe in the earnings report, they talk about that, but it's not going to be itemized in here. But one thing to highlight, I think Berlin is actually at about 1,000 a week already. At least that's what I saw in terms of reports. So 1,000 a week, Berlin is already ramping up or is already at, and then they're ramping up past that. So we'll see. And by the way, remember, in terms of price action, if I go back to it for a second, a big portion of my thesis of consolidating or selling off here, back down and retesting, is the fact that we've run so much, right? Like, let's not lose fact of the matter, which is, we've run about 45% in the last 13 trading days, last 17 days. We've ran 45%. So, I'm not saying it's impossible for us to continue the break upwards, but if we consolidate it in around here, as long as we held 1,000, I don't necessarily mind to consolidate in around here and build a base. Again, because I want a long-term, stocks can't go up forever. So, consolidating here back above 1,000 though, I think that's more than fair game. So just my thoughts. You guys are saying Monday stock will drop 90%. Someone said I'm buying at 1010. So we'll see. And remember, there is a gap here between 1050 and 1020. By the way, the options market, I've been lacking on the options talk for a little bit here. I'm going to get back to it. But next week's option chain, if you take a look at it for a second, the one standard deviation delta out the money on the call side, it's about 16 delta, let's say 17.6 here. It's about $1,200 strike, $1,200 strike. So about $120 out the money. And those are costing about $7.50, $8. Let's say $8 is what they're costing. On the put side, if you go out one standard deviation deltas, right here, 16.86, that's 1,000 strike. That's only 80 points out the money. So 80 points on the downside or 120 on the upside. And those are costing about $10. So there is downside bias baked into the options chain. I think a lot of people were hedging whatever they wanted last week. So take that into consideration. We didn't see a massive amount of call buying right before close like we did for quarter one deliveries. So something to take into consideration there. But one thing to take into consideration as well is how massive Tesla earnings are going to be this year. I'm talking about fiscal year 2022. Even if you analyze 310,000, that's about 1.26 or 1 point, let's just round up 1.3 million cars for the year. That's about a $13 adjusted gap earnings, $13 per share. I think Street's at $10 or something like that. So just annualizing the first quarter with all, and remember, when you analyze first quarter, not only are you annualizing seasonally low volumes, but you're annualizing what are the lockdowns, what are supply chain issues that you're not going to see in quarter 2, 3, and 4. That gets you to about $13 adjusted gap EPS already. That's assuming no growth. So, if we were to, again, to grow, let's say 70% quarter 2, and let's say we were to grow 70% let's say quarter 3. Let me just do some quick math here if I can, and I can adjust these numbers if I have to. So 70, let's just say Tesla grew 70% with the new factories. That would get us a sum of 1.58. Let's round up 1.6 million cars delivered for the year. That's about a $16 adjusted gap EPS. So quite the discrepancy that we're going to see. I see someone's guessing a Tesla closing price guessing game. So I guess we'll see. It's going to be an interesting time nonetheless. What happens? I think consolidation here is probably fair. Again, macro dependent. If macro is really green, maybe we see a slight bump up. But I wouldn't expect what we saw on January the 3rd when Tesla reported earnings. We went up 10%. That was a different story. I think we probably get a couple quarters like that this year, regardless. But again, just holding our breath underwater for quarter 1 and surviving, I think, was a remarkable feat for Tesla and the team. So much love, everyone. Next week is Austin grand opening, so a lot of things to look forward to in the next couple of days to weeks for Tesla Land. The split, I see a lot of comments about the split as well. For what it's worth, I am betting on a 10-1 or more split for Tesla. Actually, don't hold me to that just yet. That's what I'm thinking right now, but I'm subject to change my mind. I'm having a debate with a buddy tonight about it, so maybe he can sway my mind a little bit. Let me know what you guys think in the chat. Much love. Thanks for tuning in on a Saturday morning, evening, Sunday morning, depending on where you are in the world. Much love. Dow, I would not worry about Dow inclusion, folks. Dow inclusion is a big fat nothing burger. There's not even a criteria for the Dow. And I would humbly suggest you to forget about the Dow entirely. It's not even a market cap weighted index. So whatever comes out of the Dow is, again, a big fat nothing burger. I don't consider it. Only because, for example, and I sound like I'm salty about the Dow. I'm not salty about the Dow, but I feel like it gets too much cred. Apple, for example, let's say if Apple, or let's say XYZ company, I don't want to name a company, is in the Dow. They're trading at 100 something bucks. Let's say if they do a 10-1 split, now they're at $10. Well, that split actually affects the price of the Dow, the weighting, because it's price weighted. It's not in market cap weighted. It's the stupidest thing ever. So I would not even consider it. And on top of that, I don't think there's a lot of assets under management already under the Dow. There's not a lot of tracking funds, let's say, with the Dow. So much love. Take care. Silence says MSNBC reporting this as a miss. Hard to report this as a miss. It was you can say slight beat, or even if you said met expectations, I think that's fair. A miss, I'm not sure how they're reporting that. Maybe they're saying, if I pull up my Chrome here, maybe they're saying, well, production was 305 and they were assuming 309. Maybe that's what they're trying to do, but that might be a Bikram yoga kind of stretch there. So we'll see. Don't worry about it. Embrace the FUD that might come. I'm not worried too much about it. Tesla has shown their resiliency. Like if Tesla came out and Tesla was sub 300, again, Tesla would have the excuse, but sub 300 is a different story. Tesla coming out at 310 still, despite everything, still quite strong. Definitely, I was overzealous with my guess of, what did I guess on yesterday's live stream? 323, I think. So I'm definitely overzealous there. But, if you ask me, I'm usually probably going to bet the over on Tesla and the Tesla team. So that's just, it is what it is. All right. Much love, everyone. Take care. I see all the comments coming in. I will catch you in the next one. Investment grade will not be coming until July is my guess. I have a video on that. Go watch it on my channel. I go into the deep depth of reading the boring S&P and the Moody's papers and reading and deciphering what they mean. And the conclusion I've come to is likely probably not coming until July. So go watch that video. Much love. Thank you, everyone, for tuning in. I appreciate the thanks. Thank you for tuning in. And I'll catch you in the next one. Maybe I'll have a video out tomorrow. Hit subscribe if you're new. Leave me a comment if you're watching on the replay as well. And Yashu signing off.